Hello and good morning, everybody. Welcome to the first installment of BBB Coffee Break. I have my coffee. I hope you have yours. Today's topic is saving money on workers' comp insurance. Possibly not the most exciting topic to talk about yet, a very important topic if you are a business owner. My name is Luke Fry. I'm going to be moderating today. I'm the Associate Director of Communication for BBB Serving Connecticut. I also have a great staff member, Joni Green, who's going to be helping out with Q&A and that portion of our broadcast, as well as Carolyn Romano, who is a part of our accreditation team. She's also going to be taking some questions about BBB, about accreditation, or any other general questions as well. Just a reminder, everybody is in mute. So if you have any questions, please feel free to type them in the questions box, and we will try to cover them all during our Q&A. Also, if you are logged in on your computer, you can go to the handouts tab and actually download the pamphlet of our BBB workers' comp program, so you can check that out as well. So today we would like to welcome Gary Cardella. He is a workers' compensation specialist and our BBB program manager at PayGo Connect Insurance. He is here to talk us through the basics of having workers' comp insurance, as well as explaining the great program that is offered exclusively to our accredited businesses. Good morning, Gary.
Good morning. How are you?
I'm great. How are you? I'm going to turn things over to you for now, and then we will have our Q&A. How does that sound?
Oh, that sounds good. That sounds good. Okay.
Right,
my name's Gary Cardella. I'm the president of PayGo Connect Insurance Group. My specialty is workers' compensation. Today we're going to speak about the BBB Affinity workers' compensation program that has been introduced late last year and is kicked off pretty well in 2020. So let me begin by explaining what an Affinity workers' compensation program is. An Affinity workers' compensation program is usually when you have a single carrier who is committed to working with a large group, a large association. And that commitment is pledging to have reduced rates, reduced premiums for members of that particular association. Our program is a little different. Instead of a one carrier that we appeal to, we have many carriers who have committed their support to BBB. In fact, we have approximately 25 insurance carriers that have committed to be very, very competitive with reduced rates for the accredited businesses of BBB. And we access those carriers through one portal. Now, that's very important because a lot of independent agents out there cannot do that. They only have a handful of companies they represent. We have 25, but you definitely need the technology to access them. Before I continue on that, let's just give an overview. I'll give you an overview of workers' compensation, and I apologize if this is going to be too elementary for people. I mean, later on in the Q&A, we can really drill down into specifics on questions that you have. But to begin with, as you know, workers' compensation is required by law in the state of Connecticut for any employer who has any employees. Workers' compensation, the coverage is very basic. It covers on-the-job injuries, which means that it pays all your medical bills and all your lost time wages should you be out for more than 3 days. Okay, 3 days is key for lost wages, but it goes back for the immediate injury. It will pay all your medical costs. And usually workers' compensation coverage does not end until both the injured employee and the insurance company sign off. So you can conceivably have a long injury lasting years and years, and that particular workers' compensation policy will continue to respond. That's by state law. Now, owners and officers in workers' compensation can opt out of coverage. There's a form that has to be submitted. I believe it's 6B that gets submitted to the state and they approve it. So owners and officers can elect not to have the coverage. And a lot of them elect not to because they don't, if they're part of the major labor payroll, they do not want their payroll in there to increase any kind of premiums that they have. Now, Connecticut is an open-rated state. Let's talk about the rates and the premiums. Okay, it's an interesting state. It's a great state as far as the insurance companies are concerned to do business with because they have what they call rate adequacy. So what that means is that the rates are good enough to support any kind of losses that may happen. Rates vary from insurance company to insurance company, as you all may know. It depends on the filings they put up with the state of Connecticut, but rates can vary. So you can have travelers for a woodworker have one rate for that particular class code, and then you can have CNA with the same exact class code with a different rate. So it depends on the insurance carrier that you're with. You can also have two insurance companies with the same class code, same rate, and different premiums. Okay. You can also have the same carrier on two different businesses starting out with the same rate and end up with different premiums because there's a lot of factors that go into the premium calculation. So a lot of people I talk to at the accredited businesses, when they give me a call, they'll say, okay, Gary, what is your rate? And that's not really the question you should be asking. The question is, what is your premium? So I will take a class code and I will take their payroll and I will take their loss experience and come up with a premium. Workers' compensation is all about losses. That's what drives the premiums. So again, when you get an initial rate, you should be looking at the bottom line premium, and in between the calculations, you should be looking to see what kind of credits that you are entitled to. Now, if you're a business that has a lot of losses, you're not going to get a competitive premium. If you're in a business that has no losses, then you're going to reap the benefits of credits and discounts. So that's part of the open rating in Connecticut, and that's very important. I just said that workers' compensation is all about losses, and it's very important that you get a handle, if you have any kind of losses, of trying to control them, or trying to monitor the losses. So, for instance, whenever you have a claim, you should report it to the insurance company immediately. A lot of people wait. They wait weeks, sometimes a month, and then they'll say, oh, yes, I better report this claim. In the policy, insurance companies want 10 days for you to report a claim. Why 10 days? 10 days allows the insurance carrier to have a defense in order to decline any kind of fraudulent claim. They can do it within 10 days and that claim would be contested. After 10 days, they lose their defense and now they own it. And when they own it, now the process begins. Now that claim is in the system and it could easily develop to be, pretty significant. So you should report claims immediately. You should also speak with your claim adjuster. You have to speak with the claim adjuster to make sure they have the right information. You fill out a form on a claim, it's not nearly enough information as if you were to have a conversation. So conversations with the adjuster is very important, because they're going to also tell you the medical provider that they're dealing with. And wherever you're located, there's walk-in clinics all over the state of Connecticut. And you should establish a relationship with one of them near your business so that you can direct injured employees to that medical provider. Okay, and that is very important. Communicate that with the adjuster, and then you have part of the circle completed. The last piece of that keeping losses low is keeping communication with the injured employee. You have to. It's very important you communicate that you're very concerned about their injury, and that you're going to do whatever it takes to make sure that that injured employee is taken care of. The goal is to keep any injured employee away from an attorney. I hope there's no attorneys out there. But as soon as you get into legal costs, as soon as you put that injured employee into that system, then those costs explode. And when they explode, they come back to the employer in the form of loss experience. So I'm sure that a lot of people have gone out for other quotes, and you talk to agents or whoever and you want them to quote your business. They'll say, fine, give me a copy of your loss report. That is the key. And in the loss report, it'll show you the actual dollars involved in the claim, which also reminds me is that if you have any claim activity, you should get claim experience every month from the insurance carrier. Every month. You have to monitor who's been hurt. You have to monitor where they are in the process. And that loss report will show you their anticipated total cost at the end of the claim. There's another key piece you're looking at here on the PowerPoint called your experience modification. And you have the insurance company rates, you have your payroll, and they multiply one times the other on a per $100 basis, and you get a premium. For people who have premiums greater than $5,000 out there, you are given an experience modification rate. For people less than $5,000 in premium, there is no experience modification rate. What the experience modification is, that is a rate that's assigned to you from an actuarial firm out of Florida. It's called the National Council on Compensation Insurance. Their sole job is to take payroll and loss information from the insurance carriers, put it into their formulas, and come up with a rate, an experience rate. They give that to the insurance carriers, and they take that rate and they multiply it times the premium to come up with a final premium. So that's why I said in the beginning, don't ask what your rate is, ask what your premium is. So I'll give an example of this. I hope it's not too confusing, but I have a large client down in New Haven. Their premium is $200,000 a year. Their experience, after we get the rates and the payrolls, we come out to a number. Their experience mod, it's called a modification, is 0.80. So we take that premium and we multiply it times a 0.80. And they get, a $40,000 discount. That's big money. Now that was 2 years ago. This year, their experience mod went up to 1.25, which means that their premium was surcharged an additional 25%. I mean, those are big increases. And I apologize for the phones ringing in the back. I know how to silence those, but so the experience mod is very important. And there's a way to you can get a copy of that in a worksheet, and it gives you, you could see a history of claims that you have. But it's very important that you have that and you look at it. And it's tallied, it's calculated one time a year. Only once a year is it calculated. And it's calculated 6 months after your policy expires. After that, if you look at it and you find that the information, you disagree with information, you have to wait till next year. You can correct it now, but wait till next year till it recalculates itself. So the experience modification, in addition to your rates, are very important. Which brings us down to, how do you manage your costs? Simple, don't have any losses. We know that's not practical. Everybody's going to have some type of loss. Practice on the job safety. However, when you do have a loss, there's certain things you can do. And I'm hoping that people who can afford it have a return to work program. Now, it's kind of impossible for smaller businesses to do that. But the larger businesses certainly can have a return to work program, a written program, which means you're going to return that injured employee to work on a lesser type of job. And it's going to be more restrictive, and it's not going to be for an 8-hour day, maybe a 4-hour day, but there's a return to work program that will reduce any kind of expenses, loss expense allocated towards your policy. And this has to be monitored. It's always monitored by HR or whoever is the designated person for workers' compensation. As I mentioned, followed up with injured employees, talk to the adjuster, communicate with the insurance company monthly. So let me explain what the advantage of the BBB program is that whenever you go to an underwriter with your account and they underwrite it, they usually get a credit score. They access, there's a number of them. DUNS is number one, and they will require credit scores on the businesses. And they're mostly, it reveals the financial strength and the management of the operation and where it's going. And that's how AM Best is. Because BBB does a lot of that work, insurance companies have signed on to not doing that piece. For accredited businesses in the BBB program, they will accept the fact that you're an accredited business and you have A+ rating, and they go from there. Major advantage. It gives the underwriter a level of comfort when they're in the underwriting process. So, but not only that, because of that, and because of the commitment from these insurance carriers, we have the most competitive rates and premiums in the state. I have 4 people, we have more than that, but I have one in particular. I mentioned 4 people, but one in particular where we ran the numbers, gave them a quote from several carriers, and we saved the individual 40%. Now that's unheard of. That's the extreme. 40%. We caught a lot of mistakes. We backed it up with loss information, those loss runs I spoke to you about, and we were able to reduce premium that way. We found people were misclassified. We found we were able to do better. As the brochure indicates, we save at least 10%. We have been averaging 25%. We went conservative in the brochure, but it's been to my surprise. I mean, I very rarely, see that, but it just goes to show you the commitment that all these carriers have to the BBB program. Let's see. that kind of wraps it up as far as an overview. It's a very broad overview. If you have any questions, we can certainly, one of the topics is the use of subcontractors. That's very important. And websites. Websites are good and bad. Websites for the underwriters go immediately to websites. And I know as a business owner, I have a website. It's very robust, and I want to create a good impression. You go to a lot of tradespeople, carpenters, or whoever, especially they say they do single-family dwellings. We do roofing. They want to portray that they could do a lot of things. So when an underwriter sees it, they see some classifications that they're not crazy about. So you have to be careful on the websites. Everything can get explained, and that's what we do. We can explain why they have roofing on there because they subcontract that roofing piece out. They do it with certificates of insurance, which also has language in their contracts. So you just have to be aware of some of these things. That's more on the underwriting side. Let's see, and that's pretty much it as an overview. Oh, one other thing, it's very important. I'm sorry, I forgot this thing. Sorry, Jeannie, but in all of this, we offer a pay-as-you-go premium payment program. And I don't know if you're familiar with that. Maybe some of you are on a pay-as-you-go. But what that is this. Traditionally, insurance companies calculate your premium. They come out with a final cost, and they divide it up into equal installments, and you might pay 10, 12 installments throughout the year. Constant installments. Pay-as-you-go is different. Pay-as-you-go is no down payments, and your premium payment fluctuates with your payroll. So if you're a landscaper here in the month of June, this is your active time. So your payroll is going to be up there. So will your premiums. However, come winter, when there's no landscaping to be done, and you might, I don't know, maybe do some snow plowing or something like that, and your payrolls are lower, you paid a lower premium. So your premium fluctuates with your payroll, which is a major advantage if you have fluctuating payroll. And in addition to that, at the end of the policy year, all insurance companies audit workers' compensation. So when it comes time to an audit, since you're on pay-as-you-go and they have the actual payroll in hand, you're not going to be surprised or blindsided by additional premium audits. You're going to be pretty spot on. So it gives you a level of comfort there. And it certainly helps in the entire cash flow process. So that's it. If you have, on my end, I don't know if Luke, you want to mention.
All right, yeah. We just ask if anybody has any questions about Gary's program or workers' comp insurance in general. If you currently have a policy and possibly have a question about how that works, I don't know if Gary can answer that question as well. So again, we urge anybody to go over to our questions box and type in there. We're also going to ask if you have any general accreditation questions at all. We also have Carolyn on our call as well. She is our business relations coordinator. So if you have any general questions also about BBB, we ask you to type in the questions box as well. I believe I saw a question come in. Joni, do you mind reading that off for us?
Yes. Would we contact you in regards to employees in NYS?
And I'm sorry, in regard to employee?
Yes.
I don't know if I understand your question.
I'm not really sure I understand it either, Gary, but it's using the anagram NYS at the end. I'm not sure what that means. New York State, perhaps?
Okay.
Yes, New York State.
So what about New York State?
So I guess their question, I guess, if they have employees in Connecticut and in New York, would their workers' compensation coverage cover those employees?
Okay, if that's your question, yes, usually it does, but a lot of insurance carriers don't want to write workers' comp in the state of New York. New York is an entirely different state from Connecticut. But if most of your business is domiciled in Connecticut and you have maybe 1 or 2 employees that work in New York, it is possible to have an endorsement put on the policy that'll extend coverage in New York.
Okay, we have another question. How does workman's comp apply to independent contractors and commission payments?
Well, if you have independent contractors, I'm assuming you're requiring them to have their own insurance. And if they have their own insurance, then you need to get a certificate of insurance from them, plain and simple. And on that certificate, there should be wording that that you are an additional insured under their policy. And there's a place to type that in, and that's common. If you don't have a certificate of insurance, the insurance company is going to charge you on your workers' compensation their payroll. That's how that works. So it's very important to get these certs in and make sure that they have coverage, unless you want to pick up the coverage. It depends. Does that answer that question?
Yes, yeah, I think so. I would just ask, yeah, if anybody else has any questions. These 2 questions were great for Gary while he's on the call here. We'll give everybody a few more minutes to type in any questions they have. Again, if you have any general questions too about BBB or what your accreditation includes, we also have Carolyn here to answer any general BBB questions as well. So also, Gary, just to kind of go back to that question about having employees outside of Connecticut. So does your PayGo Connect program mainly cover Connecticut employees? If a person here, again, does have employees in, let's say, New York, possibly on that Massachusetts border, does your company also, cover those employees as well?
Yes. Yeah, we have accounts that might have 2 locations. Let's see, home health care is common location in Connecticut, 1 down in Florida. So we write a policy that covers extends to both states. There's a place on the workers' compensation that you have to put in for the states you want covered, and they'll cover it. Now, in the premium calculation, those rates will be different in those states than in Connecticut. So you'll see how they break up the calculation, 1 for Connecticut, 1 for Florida, or they'll have Connecticut, Massachusetts, New York, Pennsylvania. So the rating will be split up, but the coverage will extend. Yeah.
Okay, perfect. Thank you.
Now, also keep in mind that a lot of times, people will ask, well, I have my workers' comp, but my liability, my property is also tied into this. And my response is, we also do the liability, property, umbrella auto coverage to complement the workers' compensation program. I mean, you cannot have a program like this unless you have the ability to accommodate the rest of the coverages. So we do. It's just that workers' compensation is the biggest piece for most employers, probably the most agonizing because those costs could just go crazy. But that's why we approach that head on. But we do the other lines of insurance also.
Okay, perfect. Yeah, that was a great topic to kind of cover. All right, I don't see any other questions coming in at this time. So thank you again, Gary, for joining us today and kind of telling us about your program. And if anybody is on today's call, any ABs, if you are logged into your computer, you can currently see Gary's email, which is gary@pagoconnect.com. And he is more than happy to answer any questions you have about that BBB workers comp program, as well as Carolyn. Her email is also up there. It is cromano@ct.bbb.org. She's always there to help you if you have any questions about BBB or your accreditation. So thank you again, Gary. We appreciate you coming on. If anybody also wants more resources from BBB, we have a great site. It's bbb.org/small business. We know a lot is happening right now with COVID and attempting to reopen. So BBB has actually created a lot of great articles on how to sort of transition during an incredibly hard time like right now. So if you have extra time, you can always go to bbb.org/small business and always connect with us on social as well. So thank you everybody for tuning in today. I hope you learned something. And again, if you have questions, there are 2 contacts there to reach out to. And I hope everybody has a great rest of their day. Have a great weekend. And thanks again to Gary, Carolyn, and Joni.
Thank you.